Good morning everyone, this is Amit Pabari, founder and managing director of CR Forex. Last week Rupee broke a important support of 81.80 and moved towards 81.60, mainly because of corporate inflows. If you see the chart, you can see that a lot of corporates have raised bond close to $3.5 billion. But the important point to note was that RBI has intervened at 81.60, and because of which on the same day, Thursday, the pair moved towards 81.80 kind of level. Now the question is where the pair is heading. Let us analyze that. Now let me show you an interesting chart. If you see the chart, the rupee has been moving in a range between 80.50 on the lower side and 83.25 on the higher side from October onwards. If you see the chart is telling you a story that it has made a 4 top and 3 bottoms. And now on 10th May, the chart is indicating based on time and even analysis that the pair can take a support between 81.50 and 81.70, and ideally it should start moving higher towards 83 kind of a level. Interesting point to note is that Fed ka jo meeting hai, that is also between 3rd and 4th May. So look closely between 1st and 2nd week of May that the currency can move higher. Now let us analyze what are the factors which can trigger the rupee upward momentum. So in the coming week, the important event is Fed ka meeting. Market is expecting that Fed is going to increase the interest rate by 25 basis point, but they are expecting that in further meeting they will cut the interest rate. But we are expecting that Fed will be hawkish in its stand. It will say that they are not going to decrease the interest rate in coming meeting. If that happens, then the dollar index is ideally moving towards 103 kind of a level, which will keep pressure on all emerging market currency. Second negative factor is, if you see the chart from last 1 month, most of the Asian currencies are weakening. If you see Japanese yen basically वो 3.5% से weak हुआ है, and Chinese yuan, it has also weakened by close to 0.67%. Rupee got appreciated because of flow. So we are expecting this 2 point can be a triggering point for rupee. Now let us see what are the positive factors. In the positive factors, the flow ka list are continue to be there. If the flows are there and if RBI is not supporting or buying at lower layer, then it can create pressure on dollar rupee pair. Now let us conclude what is the view for rupee. The pair has taken good support at 81.60 as RBI has bought dollars aggressively. Looking at time and event analysis, weaker Asian currencies and rising geopolitical tension between Russia and Ukraine, China and Taiwan, and if Fed is hawkish on its coming monetary policy, all of these are indicating that ideally the pair should take support between 81.50 and 81.80, and ideally the pair should move higher towards 82.5 to 83 levels in coming days. Now let us discuss strategy for thin margin exporters like agri exporter or chemical exporter. Most of them have taken costing between 81.50 to 81.80 kind of a level. They should keep a stop loss of 81.50 or costing, whichever is higher, and they should act in a following strategy. Cover 50 to 60% of their exposure between 82 to 82.20. For remaining exposure, they can wait for higher levels of 82.40 to 82.60. Now let us discuss strategy for thick margin exporters like textile exporter or engineering exporter. They should ideally wait for some more time. They should keep a stop loss of 81.50 to increase their hedge ratio. They can target 82.80 to 83 kind of a level. Now let us discuss strategy for importers. If you see the volatility in rupee, it is at a multi-year low, and it is indicating that the breakout is due, and there are higher chances that the breakout is going to be on the higher side. So ideally, any dips towards 81.50 to 81.80 should be used as an opportunity by an importer to cover their imports for the next 45 to 60 days. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.